move on, and there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Gautam Kalia, Senior Vice President, Head, Super Investor at Sharekhan by BNP Paribas. Good evening, Gautam. And just in case if our viewers want to send us their portfolio queries, you can WhatsApp your number, your question on our number, which is 865-797-4571. You can also email us your queries on the money show at 18now.tv. So that's the place and the address where you need to send us your portfolio queries. Gautam, let's begin the session. And do we have Suresh online with us from Kochi?
Yes.
Hi Suresh, good evening. How are you doing?
Yes, I am retired now.
Sorry, what was that? Okay, I think Suresh, can you hear me?
Yes, I would like to know the ELS scheme.
Right, got it. All right. So you want to invest in mutual funds for tax saving purpose. Okay, Gautam.
So, hi Suresh. So I'll give you a couple of schemes that you can consider. These are part of the equity linked savings scheme category. Obviously, you'll get the tax benefit under Section 80 if you invest in these. So you could look at Mire Asset Tax Saver Fund and Canara Robeco Equity Tax Saver Fund. So these have been shortlisted and are part of the funds we like through our research. So we'll look at these two as options to invest in.
All right. So Suresh, any other question you want to ask Gautam?
Only this question I go. Only the same question. Nothing else.
Thank you so much. We move on. Do we have Arijit from Bangalore online with us? Arijit, are you there with me? Arijit, can you hear me?
Yes.
Hi, good evening. Thank you so much for sending us your query. You are planning to invest in NASDAQ 100 and you're thinking of doing an SIP in ICICI Pru NASDAQ 100 fund, and you want to know whether this fund is good for your portfolio and what could be the potential risk of diversifying this way. Is that right?
Yes, that's correct. Yeah.
Apart from this, do you have your basic portfolio sorted?
Yes, so I have created a basic portfolio mostly consisting of large cap, mid cap, small cap and flexi cap.
All right. So this is just for diversification purpose. You want to add an international exposure fund. Is that right?
Yes, I want to have an international exposure as well as diversify my funds.
Sure. Gautam?
So Arijit, good to know you've got a core portfolio already made, and then now you're expanding on it, reducing your country focus, home country bias you're reducing and looking to add. I think the NASDAQ 100 is a good place to start and build your exposure. You're thinking of doing a SIP in the ICICI Prudential NASDAQ 100 fund. Sure, you can do that. I think the key question that you have is what are the risks? So obviously the key risk is one, that you're adding a new economy, a new country. So you have to keep an eye out on the political risks of that country. In this case, obviously, is USA. So that's something that you have to keep an eye out on the economy as well, which I think, even as an Indian investor, we tend to get into the habit of looking at the US market as well. So that is one. The second, obviously, is the currency risk. So in many ways, you can mitigate that risk if you are actually planning any spend in dollars in the future. But the currency risk is someplace where you can see volatility between USD and INR. Traditionally, historically, the INR has depreciated against the dollar at about 3.5% per year. And if you are investing in a fund like this, you'll get the advantage if that trend continues. Obviously, there's a lot of news flow now and events taking place around the world with de-dollarization that could upset that trend. But having said that, if you have any investments planned, any expenditure planned in dollars, maybe child's education or a trip abroad, so you could look at this as the allocation for that spend in the future. that way you can mitigate that risk. So these are the two key risks that you need to bear in mind. Obviously, there are other risks, but these ones I thought I'll highlight for your benefit.
All right. Arijit, do you want to ask anything to Gautam?
Yes, just wanted to understand if there is any outlook towards what is the outlook towards the ICICI NASDAQ 100 fund?
Yeah, so the outlook is positive, not just for the fund, but for the underlying index. We believe that even though with the recent rate hike, you see a lot of non-financial companies continue to do well. There is a lot of innovation coming in from the US economy. So it's not probably not going to be as rapid as we've seen in the past. So certainly don't expect the kind of performance we've seen over the last 5-6 years. And because that was mostly led by the liquidity tap that was open through quantitative easing. And now with interest rates rising, obviously that all of that is going to get impacted. So while we are positive, it's a more cautiously optimistic stance that we have. So please bear that in mind and look at it, from a diversification, long-term investment rather than a opportunistic investment.
All right. Thank you so much, Arijit, for sending us your query. We move on, and we have Mr. K. Ravichandran on the phone line with us. Hello, sir. Good evening. How are you doing?
Hello.
Hi, sir. Good evening. I can hear you, and I think you want to know about complete withdrawal from NPS. Is that right?
Yes.
Okay. So you want to understand how much is taxable. So Gautam, 60% is tax-free, and the rest you will have to buy an annuity. Is that right?
Yes, that's right. But there's a new rule which says that if the amount is less than 5 lakhs, then you can withdraw the entire amount without any tax incident. So you can withdraw up to 5 lakhs, and these withdrawals are also tax free. So I think you can go ahead and withdraw that amount if that's the intention.
Free, Gautam, by tax-free, 5 lakh amount is EE exempt. Is that what you're talking about? Okay, perfect. Mr. Ravichandran, is there anything else you want to ask?
No, that's all. Nothing.
All the best, sir.
Thank you.
We move on, and we have Mohammed on the phone line with us.
Yes, ma'am.
Hi, good evening. How are you?
Good evening, ma'am. I'm good.
You want to understand if you can continue your SIP in Axis Blue Chip.
Yeah, that's correct. My main query is I have a large cap allocation to the Parasparik Flexi Cap and Axis Growth Opportunities, which is a large and mid cap category. And also I have investment in Mirai Asset Emerging, which is again large and mid cap category. I am doing an SIP for an amount of 1.25 lakhs per month. So I want to know whether I have to continue the Axis Blue Chip Fund because you see the last 1 year, 3 year, and 5 year performance is lagging the benchmark.
All right, thank you so much, and thank you for asking this question because Gautam, a lot of time investors really ask this about repeating their allocation of certain categories, and when you have a flexi cap and large and mid cap, your large cap component is definitely repeated, especially if your flexi cap is large cap bias. So what can Mohammed do for his SIP or his investment in Axis Blue Chip now?
Yeah. So actually there are two questions here. Let me first answer the main question, which is that should you continue with Axis Blue Chip? At one point of time the performance was quite good, but we've seen that performance deteriorate over time, and that's why we are suggesting that our clients consider alternatives like ICICI Prudential Blue Chip Fund. So you could consider that as an alternative to your Axis Blue Chip. So that was, the answer to one of your questions. The other is about whether you should have exposure to like a blue chip, a mid cap, a small cap, and a flexi cap. So it essentially when you invest in a flexi cap, you are delegating the cap selection and cap strategy also to the fund manager, and the universe is broader for the fund manager to choose from. When you're investing in a large cap, you're essentially limiting the choices of the fund manager to focus mostly on the large cap space. So a core portfolio of key funds can have actually exposure to all because the strategy varies. So a flexi cap fund manager will view the problem differently than a large cap fund manager. So I think it's good to be able to give that additional opportunity. You're actually chasing returns. You're looking at a different benchmark also there. So that kind of brings in a certain different approach and a form of diversification in terms of strategy. So definitely you should consider having a mix of.
All right. We quickly move on to our last question, which is from Noel John, Kerala. Noel, are you there with me on the phone line? Noel?
Yes, I'm
Hi,
here.
good evening. Hi. All right. So you are invested in the markets already and you want to invest in an international fund.
Yes.
But you already have ICICI Pru US Blue Chip Equity, right?
Yes, recently I have invested in ICICI Pru.
You're just 21 years old, congratulations for having that kind of a knowledge and awareness when it comes to investing. When you're talking about Indian equities, are you invested through mutual funds or direct stocks?
Yes, I have invested through mutual fund.
Oh, that's very nice. Gautam, I don't have much of time left in my hand, but then what should Noel do? He already has one US blue chip equity fund in his portfolio.
Yeah, so Noel, it's a good fund. Please continue with it. And if you want to increase allocation, please do. If you're looking for another fund to diversify, you could probably look at a fund, Global Opportunities Fund from PGIM or Invesco. But otherwise, there's nothing wrong in this fund. You can continue here. Short and sweet answer.
All right, on that note, thank you so much, Noel, for sending us your query, and thank you so much, Gautam, for removing time and helping our viewers with their financial portfolios. Time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can send us your portfolio-related queries. Thank you so much for watching. Goodbye.